Hello everyone, welcome to my channel. This is Easy Accounting channel. Today we are going to talk about the relationship between credit and debit entry. So let's get started. All businesses transactions are recorded either on the debit side or on the credit side in the books of the accounts. This is the double entry principle that we must follow. So every debit entry must have a corresponding credit entry. Now, debit side is always on the left hand side of the column, while the credit side is on the right hand side of the column. So debit entry increases the assets, the expense, while the liability and equity accounts are decreased. Then when we do the credit entry, the liability and equity accounts are increased, while these debits, the expense and the asset entry are decreased. So the basic principle is this: assets equal liability plus equity. So the asset account, always know the asset account is debit entry because it's gonna increase the balance in that asset account, while the credit side of that column will surely decrease. Then the liability account will decrease because it's a liability, while if you increase it, it will surely be credit entry. Now, let's talk about equity accounts. The equity account decrease the balance and the credits increase the balance in the account. Revenue, debit decreases the account, while credit increases the balance in the revenue account. The expense account, debit increase the balance and credit decrease the balance in the gain account. Debit decrease the balance and credit increase the balance. The loss account, debit increase the balance and credit decrease the balance. Let's give some examples of debit and credit entry in the business transaction. Purchase cash inventory. Anytime we do purchases, we purchase item from our supplier, we must debit the inventory account and credit cash accounts. And when we buy on credit, we purchase on credit, we have to debit inventory accounts, credit accounts payable. When we do cash sales, we debit the cash accounts and we credit the revenue accounts. When we have credit sale, we have to debit account receivable and credit revenue accounts. Loan accounts. When we do borrow loan from bank or from any investors or from any institution, we have to debit the cash accounts and credit loan payable accounts. Then loan repayable, when we are paying back our loan, we have to debit loan payable account, credit cash accounts. Then employee payrolls. These are the debits, the salary, the wages account, and we credit the cash account. Supplier cash purchase. When we purchase from our supplier, we have to debit the supplier expense and credit cash accounts. Then when we supply on credit, we have to debit supplier's expense account, credit account, payable accounts. Thank you for coming to my channel. I hope to see you in my next video. Please subscribe to my channel. Thank you. Bye bye.